All right, people. So, welcome to Jumbo IAS and welcome to UPSC Prelims Phoenix batch. Now, if you have been following this batch for quite some time, you are quite familiar with the routine. Now, as per your schedule, as per your daily targets, weekly targets, well, today your target is Union Budget 2026-27. So, today's lecture is going to entirely focus on this document. Now, as far as your notes are concerned, which we provided to you, well, in those notes, I have shared two documents, okay? One document is basically notes from us, and one document, well, I downloaded from government's website, okay? Finance Ministry's website, and that contains many infographics and all that stuff. So that is why I've shared that government document also with you, clear? So that you can visualize certain government announcements and all. That document was beautifully built. That is why I shared it with you, okay? But the notes provided by us are divided into three sections. First section focuses on key terms that you need to be familiar with. Most of those terms were covered in our chapter on fiscal policy, okay? So you just need to brush up those terms. Those are not related to basically current affairs. Those are static concepts that you need to be familiar with. For example, what is fiscal deficit? What is Article 112? What are expenditure charged on Consolidated Fund of India? So that is the key information that you should be aware of before studying budget. Then section 2 was all about key features of union budget, and section 3 in our notes was focusing on tax reforms announced by government. Okay, so that document from us on union budget, okay, from us, I'm not saying government, from us, well, was divided into three sections. These are those three sections. I hope you have already studied them, okay, all three sections. I hope you have studied the entire document in its entirety, so that now that you focus on this lecture, it will give you more value. Okay, please do not watch this lecture before revising the notes. I say this every time. I'm going to say it again. All right. Okay, so that is all I need to announce before starting with this lecture. So introduction is over. Let's now straight away dive into the lecture. All right, so economics part 10, and our today's topic of discussion, or our today's target was Union Budget 2026-27. Now remember this, that the questions that we are going to discuss would be a mix of both, okay? Those key concepts, key terms, key static concepts, as well as various government announcements, government schemes, all of that would be covered in today's lecture, okay? So let's straight away dive into the lecture. Let's straight away start with question number 1, okay? So with reference to constitutional provisions for union budget, consider the following statements. Annual financial statement is mandated under Article 112 and must display actuals for upcoming fiscal year. Okay. The finance bill is defined as money bill under Article 110 of the Constitution. Accounting classification for receipts and disbursements are governed by Article 150. Okay. Now, the thing is that, well, budget is constitutionally mandated under Article 112. And Article 112 uses the term annual financial statement instead of budget. Okay. Now, the budget document basically gives you estimates, okay, estimates of receipts and expenditure of 3 years. Okay. Yes, we all know that budget is nothing but accounting of receipts and expenditure of the government. Okay. But these receipts and expenditures are basically provided for 3 years. So the upcoming year, the coming financial year, which will begin on 1st April 2026 and would go on till 31st March 2027. This is upcoming year. Okay. Then the current year, which is currently going on and will end on 31st March 2026, which was 2025-26. And the previous financial year, which was 2024-25. Okay. So data on receipts and expenditure is provided in the budget document for upcoming year, current year, and previous year. Okay. Now, all the estimates for the upcoming year, okay, and these are estimates because it is upcoming year. We don't know how much money the government would get or would spend, but government has made a planned estimate or government has made an estimate. That is known as budget estimate, BE. Okay. Then for the current financial year, though the financial year is not over yet, but still the government has certain idea. The government has some idea with respect to the estimates. Okay. So that is given by revised estimates. And for the previous financial year, all the data has been collected by the government. So government has actual idea as to how much money government got and how much it spent. Okay. These are known as actuals. Okay. The actual money that government got. So this is just, and these are just estimates. Clear? Now must display actuals for upcoming fiscal year, not upcoming, previous fiscal year, 24-25. Okay. So this statement is false. Finance bill basically contains all the tax related proposals in the budget. Is defined as money bill because all tax related proposals are part of money bill, and the definition of money bill is given in article 110. So this is correct. Now, the accounting of all government departments, everything in the budget is basically has some link with CAG, and it is mentioned in article 150. Okay, so this part is correct. CAG would tell you how the account should be prepared, and this is mentioned in article 150. So accounting of receipts and disbursements are governed by article 150, in which CAG will tell you that. So second statement is also correct. Except first statement, all statements are correct. So the answer to this question would be B. Right? Next. Consider the following statements regarding 3 government accounts in India. No amount can be withdrawn from Consolidated Fund of India without prior parliamentary authorization. The Contingency Fund of India is placed at the disposal of Finance Minister to meet unforeseen expenditure. Parliamentary authorization is generally not required for payments from public account of India, as these funds do not belong to the government. So there are 3 funds at the disposal of the government which are governed by Article 266 and 67. Okay. So one is Consolidated Fund of India. The other is Contingency Fund. This is the emergency fund, only used for emergencies. And then there is Public Account of India. So whatever money government collects in various funds, for example, Provident Fund, money collected by government which the government has to return to people with some interest, National Savings Certificate, Provident Fund, all of that is under Public Account of India. Now, no money can be withdrawn from Consolidated Fund of India without authorization of the Parliament, and this authorization is taken in the budget. So this statement is correct. Contingency Fund of India is only used for emergencies and no parliamentary authorization is required. But this fund is at the disposal of President, not Finance Minister. Okay, though President is bound by the aid and advice of Council of Ministers, yet it is still the President. So this statement is false. Parliamentary authorization is generally not required for payments from Public Account of India. Obviously, because the government has taken this money from people to return it to them with interest under Provident Fund. So you don't have to take parliamentary authorization every time. So this part is also correct. Remember this, okay? So the answer would be 1 and 3. Right? Next. In the context of budget structure, which of the following are classified under the capital budget? Grants in aid given to state governments for creation of capital assets, market loans and receipts from loan recoveries, investments in shares and loans granted by center to union territories. Okay. Now, we have covered this capital and revenue account in our fiscal policy chapter. So this question should be very easy for you. Grants in aid given by central government, no matter how they are used by state government. Okay. Grants in aid given to state governments by center would be in revenue expenditure. So this part is false. Yes, loans and receipts from loan recoveries, loans, investments, all of this is capital account. Investment in shares, government bought Tata shares, or loans granted by center to UTs. Loans are part of capital account. So the answer would come out to be 2 and 3. Okay, next. Which of the following items are included under charged expenditure on the Consolidated Fund of India? Okay. Now remember, any money withdrawn from Consolidated Fund of India requires parliamentary approval. And this parliamentary approval is taken in the form of demand for grants. Okay. So when the budget is presented, it is being discussed and then it is voted upon. So all the money required by the government, which is mentioned in the budget, okay, that is voted upon in Lok Sabha in the form of demand for grants. So government needs 1,000 crores for Swachh Bharat Abhiyan. Okay, that would be presented as demand for grant and Lok Sabha would vote on it. And there are various cut motions on it, which we'll discuss in polity subject. Okay, so this is there. But there are certain expenditure which are charged upon Consolidated Fund of India. That means they are not voted on in the Lok Sabha. These are salaries and allowances of CVC, interest and repayment of government loans, payments required to satisfy court orders, emoluments of President of India, salaries for other dignitaries, CAG, all of that. So there are many things that are charged upon Consolidated Fund of India. All four are included in this. So answer to this question is pretty basic. 1, 2, 3, 4. D. All right. Next. Regarding Fiscal Responsibility and Budget Management Act, which we have discussed in Fiscal Policy chapter, consider the following. Macroeconomic Framework Statement assesses the fiscal balance of central government and external sector liability. External sector liability, liability outside India. Okay? Money owed to World Bank, IMF, all the others. Medium-term fiscal policy statement sets 5-year rolling targets for indicators like primary deficit and central government debt. Well, instead of 5-year, if 3-year would have been written here, the statement would have been correct. So that is why the statement is false. First is correct. The answer would come out to be A. One only. All right. Pretty basic, pretty simple question. Next. Yeah, this was announced in this year's budget. With reference to output outcome monitoring framework mentioned in 2026-27 budget, consider the following. Basically, government gave a framework on how to measure the results of various central sector scheme and centrally sponsored schemes. Look, government allocates a lot of budget on various schemes, but there is no accountability in these schemes. Okay, what happened to these schemes, or what were the results of this scheme? So government has spent 1,000 crores on Swachh Bharat Abhiyan. What were the results of that? We should know this. We have the right to know this. In fact, this would be better, because the next time government would prepare a budget, government would know what can 1,000 crores do for Swachh Bharat Abhiyan. This is a better exercise. Okay. Now, it defines measurable targets for both central sector and centrally sponsored schemes. Yes. All schemes, regardless of financial outlay, must be laid in Parliament alongside the main budget. So this is false. And I'll tell you what. All schemes which have a budgetary outlay of more than 5,000 crore rupees will be laid in Parliament alongside budget. So they would be presented separately with the budget. I mean, they would be part of the budget, but they would also be presented alongside the budget. But all the schemes whose outlay or whose budget is less than 5,000 crore, they would be presented in the form of demand for grants. Regular, normal demand for grants. Okay, there would be demand for grants for these as well, but they would be presented separately. They would have a separate discussion on them also. So this is the thing. Not all, only 500 crore plus. So A. Okay. Next. Which of the following best describes primary deficit as per budget at glance, the document? Okay. So primary deficit. So what is primary deficit? We all know about this. Fiscal deficit minus net interest liabilities is primary deficit. We have covered this. There is no point in spending more time on this question. It is fairly direct. Gross fiscal deficit minus interest payments. We have discussed this. Okay. I gave you an example also, Congress, BJP and all. So the answer to this question would be C, fairly easy. Next. Regarding fiscal targets and indicators for 2026-27, this year's budget, which of the following statements are correct? The government targets debt to GDP ratio. You understand debt to GDP ratio? How much debt the government has as a percentage of GDP? 41% by 2030. The vertical share of tax devolution to states is set at 42% following 16th Finance Commission. Okay, that 42% should be given to states. All the tax revenue collected by the government, central government, 42% of that would be given to states as per 16th Finance Commission. Fiscal deficit for budget estimate. You remember I told you budget estimate is BE is for next year, is estimated at 4.3% of the GDP. Transport has the second highest absolute expenditure allocation after defense. Okay. So as per the budget announcement, government targets debt to GDP ratio at this 50% plus minus 1 by 2030. Currently, we have around 60%, more than 60% of debt to GDP ratio. Okay, we need to target it at this. We want to reduce the debt. Vertical share of tax devolution to states as per 16th Finance Commission is 41%, not 42%. Yes, the fiscal deficit target for next year is 4.3% of GDP. This is correct. And by the way, transport has the highest expenditure, more than even defense. Government is basically spending more money on connectivity projects, transport projects, roads, bridges, highways, all these. So transport has not second highest, highest. This was a surprise. Generally, defense exceeds everything else. So this is also false. The answer to this question would be C. All right. Next. Now, these are questions related to various government announcements. Okay, schemes. So with reference to MSME and manufacturing sector reforms in budget, consider the following. A 10,000 crore small and medium enterprises growth fund has been established. CPSEs, Central Public Sector Enterprises, central government PSUs, are now mandated to use TREDs for all MSME purchases. The 10 lakh value cap per consignment on courier exports, okay, DHE, all these courier exports, has been increased to 50 lakh. Now, yes, this fund has been established. Yes, CPSEs have been told that if you are purchasing anything from MSMEs, buy it on TREDs. Now, what is TREDs? You see, when a big company purchases anything from MSMEs, they make a payment after 90 days or 60 days. Till that time, these MSMEs have to wait. But sometimes they need the money ASAP. So they can use the bill. Okay. So MSMEs sold something, okay, on the bill, and they would get a payment for that after 90 days. But they need the money now. So that bill would be put as collateral in a bank, and bank would provide a loan on it using this platform called TREDS platform. So CPSEs have been directed to use TREDS platform for all purchases so that MSMEs can use these bills for getting cash from banks. You understand, right? So to help MSMEs basically. So this is correct. Government has removed all cap on courier exports. This was the recent announcement to promote courier exports. Okay. You do courier, there is courier service. You all are familiar with this. These courier services are also used for exports. So no cap is there. So basically, if third statement is incorrect, the answer would come out to be A. All right. Next. Purvodaya initiative, as mentioned in the budget, is primarily focused on development of high-speed rail corridors in North India, integrated East Coast Industrial Corridor, ecological rails for bird watching in Himalayas, financial support for Tier 3 cities in Western India. Now, Purvodaya, if you understand Hindi or Sanskrit, well, Purv means east. Okay, and Uday means rising, like a rising sun. So, rising east, a rough translation in English. Okay. Now, what would that mean? If you know the meaning of this word Purvodaya, you would have been easily able to guess the answer. It won't be North India, it won't be Himalayas, it won't be Western region. Rising east would obviously mean integrated East Coast Industrial Corridor. So basically, government wants to develop Eastern India, which includes states. Government through Purvodaya initiative is going to focus on the following states: West Bengal, Bihar, Jharkhand, Odisha, and Andhra Pradesh. Okay. Now, these eastern states would be developed. Okay. So, there would be good highways, railway projects, transport infrastructure. We would develop industrial corridors over here. We would promote steel industry over here. We would promote tourism over here, especially Buddhist circuit, because there are many Buddhist sites over here. So that, well, this actually happens, rising east, rise of eastern states, economy-wise. So this is Purvodaya initiative, government's focus on Eastern India and Eastern India industrial corridor. Okay, so the answer to this question would be B. All right, next. Regarding energy security environment in 2026-27, consider the following. 20,000 crore outlays dedicated to carbon capture, utilization and storage. Basic customs duty is exempted for capital goods used in manufacturing lithium-ion batteries. Biogas is now subject to higher central excise duty when blended with CNG to promote electric vehicles. Okay, now listen to me very carefully. These are some of the announcements made by government for environment. So government has allocated 20,000 crore rupees for capturing carbon from the atmosphere, utilizing it or storing it. So this part is correct. Now, government wants to promote lithium-ion batteries and manufacture of lithium-ion batteries in India. Government wants to promote that. Okay, why? Because lithium-ion batteries would be used in electric vehicles, and government wants to promote electric vehicles. Now, sometimes the machinery for manufacturing lithium-ion batteries have to be imported from abroad. And well, the importers have to pay a custom duty. That makes these machines expensive. So government has exempted them from customs duty. Okay. Yes. Government also wants to promote alternatives to petrol and diesel for cars. Now we can use CNG for that. CNG are less polluting. So government wants to promote that. So if you are blending biogas with CNG, you don't have to pay any excise duty on biogas. Okay, government wants to promote usage of biogas and CNG blend in vehicles because they are less polluting than petrol, diesel. So not higher, they are exempt from excise duty, this biogas. So this statement is false. The answer would come out to be A. Right? Next. The term Bharat Vistar, recently seen in news, refers to high-speed rail corridor between Chennai and Bengaluru, new initiative integrating agri-stack portals and Indian Council of Agricultural Research practices with AI systems, specialized training program for 1.5 multi-skilled caregivers, global summit for protection of big cats. Not this, not this, not this. Remember, Bharat Vistar is related to agriculture, usage of technology in agriculture. So we call this agri-tech. So all the tech initiatives, all the tech digital infrastructure, DPIs of government are put on this agri stack. Okay, so all the tech initiatives or all the technologies, like there is UPI for money. Similarly, there are various tech platforms or various tech portals or tech DPIs. Okay, for agriculture. Though all of them have been put on one single portal called AgriStack, and now we are merging it with AI. So as these AI systems give better solutions to farmers. This is Bharat Vistar. Okay. Next. In the context of direct tax reforms, what is the significance of retrospective immunity? Retrospective means going back in time. So if you are caught not disclosing your foreign assets, so let's suppose you pay income tax, you declare your income, but you had certain assets outside India. You did not declare them so as to save them some tax. Now, if the government finds about it, well, there is going to be penalty and some charges against you. But this time, government came out with some immunity for these people so that they declare these foreign assets now, okay, without the fear of any punishment from the government. This is retrospective immunity. It provides immunity for non-disclosure of foreign assets under 20 lakh, not big tax frauds. Under 20 lakh, if there are foreign assets and you fail to disclose them, government is forgiving you basically from October 2024. So this is that. Okay. Next. With reference to care, economy and tourism initiatives, which of the following are correctly matched? So Divyang Sahara Yojana, assistive devices for persons with disability. Global Big Cat Summit to be hosted by India for the first time to promote tourism, eco-tourism. Medical value tourism hubs, 10 hubs to be established across tier 2 cities. It's actually 5. Not 10. 10 would be too much. I'm so sorry again. So this is trivia based question. 1 and 2 are correct. So the answer to this question would come out to be A. All right. And next, consider the following statements regarding indirect tax reforms, GST, excise, customs duty reforms. Basics customs duty is fully exempted on 17 drugs used for cancer treatment. Validity of customs advance rulings has been reduced to 3 years to ensure faster updates. A single interconnected digital window for cargo clearance is to be rolled out. So yes, this part is correct. On 17 drugs, if you are importing them, you don't have to pay any customs duty. This is to promote medicine, okay, pharmacy in India. Validity of custom advance rulings, okay, has been increased to 5 years, from 3 to 5 years, not reduced. These rulings are now valid. These documents are now valid till 5 years. And third statement is absolutely correct. A single portal for all cargo clearance, whether the cargo is coming into India or getting out of India. So 1 and 3 only. Right?